Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Thursday, 27th day of August, 2020, and this is the daily report for gold and silver. Chairman Jerome Powell spoke virtually at the Economic Summit, which got underway today, and although there were no surprises in terms of what he conveyed, the message as well as the revamping of their monetary policy, expecting the unexpected came in terms of having gold and silver both trade lower following the announcement. We had some wild swings with gold trading to a high above 1980, a low of 1940. We are currently in a trade. We'll talk about that when we look at our technical studies, but first to the price changes today. We got what we expected when we thought that we would see pretty wild price swings today, considering that the high today was $1,987 an ounce and the low was $1,914.70 an ounce. We certainly got a pretty wide range. Powell said exactly what most analysts and market participants were expecting. However, the reaction to that was muted at best, and traders took advantage of the uptick yesterday to take away some of the gains. We saw gold close down $16.30, 1963.20, taking back roughly half the gains that were achieved in trading yesterday. When we look at silver, that sold off by 1.4%, 27.06. It's a 39-cent drop. Again, a pretty wild price swing with the low at 26.56 and the high at $28 per ounce. Now, all of that was in light of a unchanged U.S. dollar, 93.01, really a net change of 0.02%. Let's take a look at our technical studies. Traders, unquestionably, we heard Chairman Powell speak. He said exactly what we expected to hear, and the anticipated reaction couldn't be further from the actual reaction, with gold selling off rather than firming through the day. Interestingly enough, it did trade to a pretty interesting high of approximately 1980 plus. The low came in at 1914, so well above our stop, but nonetheless against us by a few dollars, about $18 as the market sits right now. And what I am noticing when I take a look at our daily chart here is that we did get a higher high today. We also got a higher low, but we had a red candle, meaning that it closed below the open. That tells me that this area of distinct consolidation, in other words, a narrow and sideways trading range, didn't really change today, and I would expect to see gold prices form a base in this area above 1900. Because when we consider where this market has come from in the beginning of March, when it traded from roughly 1450 up to 2087, we had a slight correction, retracement, we moved back up, and now we move down and are sideways. I would look for a interim or medium range between 1940 and 1960. I would expect the market to break to the upside, and that is simply due to the fundamentals at play and the current environment in which this market has been rising in. They haven't changed. The other thing, and we talked about this yesterday in both gold and silver, we have had a succession of lower highs, we've had a succession of higher lows, and so when we put that together, we have a compressing range. We are approaching the apex, and I would expect the energy released once we hit that apex to move the market sizably. Now, standard techniques tell us that when you have a pennant formation, you can get a break either to the upside or downside. However, you will typically get a return to the most prevalent trend direction, which in this case has absolutely been up, and I would expect an upside breakout. Therefore, traders, my recommendation is to maintain your current long position and to maintain your current stop. And traders, much the same in terms of market reaction to Chairman Powell's speech at the Economic Summit today was found in silver as well as gold. We also talked about the fact that we are witnessing a compression of range in silver. It seems to be more evident than what we're getting in gold. The interesting thing is, yesterday, we talked about the fact that silver broke above that resistance line, and today, although it traded to the resistance line, that pretty much matches the low here, and it did contain a higher high, and the open and close, meaning the real body of this candle here, was all within a price range above that resistance line, which I believe could easily now become support. Therefore, traders, we're currently trading at 27.11, putting it up about 8.5 cents. This, of course, as it opens in Australia today. My recommendation is to maintain your current long position and to maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.